Joining us now with his outlook for the sector, Paul Sankey, oil analyst at Mizuho. Where do you rank coronavirus in terms of what it does to oil?
Well, we don't really know, but potentially very seriously, because it's not so much the absolute impact of what happens, it's what happens at the margin with oil, and all the growth is essentially from China. So as soon as you see China and India, but as soon as you see something like this that affects China at the margin, it becomes extremely negative and very concerning, and we are oversupplied in oil. So it becomes a double whammy.
There's been a lot of volatility recently because of action in the Middle East and other things. How are the oil companies, how are Chevron and Exxon positioned to weather all of this volatility?
Well, what we're saying to them is you've got to plan on 40 and let's make everything else free cash flow. So get your capex down, get your spending down, get your costs down. Effectively do a ConocoPhillips. Plan the company at 40, and all this noise, which is unavoidable, just becomes either more free cash flow or less free cash flow. But the companies and the E&Ps are getting there. We call it the Renaissance thesis. They have to be in the same position. They have to be able to coherently pay a dividend and maintain some sort of volume sustainability at 40, and then, who knows what's going to happen next, because it could be Wu-flu. But don't forget, we've also got Libya. Libya's not getting any attention right now, but there's 1 million barrels a day offline in Libya right now.
We're down 7% in the week, 11% so far this year. I mean, how much have we got ahead of the current situation? Are we already pricing in a sort of SARS-style epidemic? If things ease from here, could we have quite a swift rebound?
Well, not really, because essentially the market is oversupplied for the whole first half. Now, that's notwithstanding the Libya situation, which actually emerged almost exactly at the same time as Wu-flu. At the moment, essentially, the DOE data, which really is prior to any of this happening, is very weak. We're seeing terrible U.S. gasoline demand, really bad distillate. We're having a horrendously warm winter from the point of view of energy demand. So actually, it's probably only just beginning to be priced in. And I think really up until probably yesterday, we weren't really sure that Wu-flu wasn't just a storm in a teacup. It now seems that it is going to be a very big deal.